You're listening to the Big Cast, your source for the latest in financial technology. Brought to you weekly by the Best Innovation Group, with your hosts, John Best and Glenn Sarvati.
Welcome to another edition of the Big Cast. My name is Glenn Sarvati on behalf of the Best Innovation Group, where we like to do cool things with financial technology. And today we've got I think, a really timely conversation. Given all the things going on these days in crypto land, we've got Becky Reed, quite a well-positioned expert in the space, Chief Operating Officer of Bank Social. And she's going to help us try to untangle all the interesting different threads that are popping up lately around the inauguration and the new administration and what it might mean for credit unions and financial institutions in terms of their engagement with crypto and blockchain in the months ahead. You can always find out more about the Best Innovation Group by checking out our website, big-fintech.com. And I will also invite you to join us on Wednesday, January 29th for our next CU Town Hall. Those take place pretty much bi-weekly. And those are live and intended to be very interactive conversations where a relatively, intimate group, but still a decent sized group of credit union leaders get together to hash out and share thoughts around the most pressing issues in the industry. Not 100% certain what we're going to be talking about on the 29th. And as I've said before, those tend to be my favorite editions of those. We run for about an hour, but it's a great chance to really hit what's top of people's minds. And there may be a lot of new things that happen even between now and the 29th to help navigate that conversation. Speaking of which, if you haven't heard it, last week's Big Cast episode was our annual predictions along with our esteemed panel with Ann Legg and John Janklius. I'll post a link to that one. The graphic that we put together for that was a bingo card. We kind of jokingly said, okay, well, what do you have on your bingo card in terms of what's going to be happening over the course of the next year? That kind of took on a life of its own. And, there's 25 spots on a bingo card. But we have created, I won't go into too much detail, but we've actually come up with, I think we're over the 60 mark right now of scenarios of things that whether we really think they might happen or they're just kind of whimsical, but wouldn't it be interesting kind of stuff. And we're also kind of having a little bit of fun by calling it a Big Go card, BIGGO. We're going to be doing a little bit more with that. And I got a feeling you might hear a bit more about that on next week's town hall as well on January 29th. It's free to attend the town halls. You do need to register in advance to get the link. You can do that at cutownhall.com. Also not on my bingo card for this year was the crypto inaugural ball, which took place last Friday in Washington, D.C. I guess it wasn't technically one of the formal inaugural events, but there's only 3 of those, and there's dozens of other kind of balls going on around the city. This one took place before Inauguration Day on Friday the 17th. And even if it wasn't official, you sure wouldn't have known that based on the folks who showed up. Again, kind of congratulating the industry for their role in getting Donald Trump over the finish line for a second term. And I think probably sending a message of, yes, and this is, we expect you to actually follow through on some of your promises and commitments to be the most crypto-friendly president of all time and the most crypto-friendly administration. Snoop Dogg, if you want to make sure you're going large, Snoop Dogg did the musical entertainment at the event. David Sachs, who's been appointed as Donald Trump's crypto czar, quote unquote, a tech investor and entrepreneur, David Sachs was there. Incoming Treasurer Scott Bessent, also a DeFi adherent, was in attendance. Mike Johnson, the Speaker of the House, the Winklevi, our favorite twins, Cameron and Tyler were there. And then for some reason that I can't figure out, former New York Congressman George Santos was there. I don't know, asking for a pardon, something like that. So just another example of how crypto has kind of invaded the consciousness all the way into Washington, D.C. There may have been a little bit of disappointment, though. I'm recording this now just for perspective. I'm recording on Tuesday morning, January 21st, and I purposely kind of came back to this topic now after having a chance to see what executive orders were published and signed on the first day of the Trump administration. There was nothing that I see that actually directly relates to the specifics of what we've been talking about, regulatory clarity, the crypto world in general, whether Bitcoin or stablecoin. Very specifically, it seems that there was some expectation among the crypto bros that there might have been an executive order to create a strategic Bitcoin reserve, which we can get into more detail sometime. I think it's a wacky idea and not a terribly well thought out one. I don't know why people might have thought that might have happened yesterday. It certainly doesn't strike me as something at the top level. There was an interview at Reuters with the CEO of Circle, who are the ones who manage the USDC stablecoin. He still expects, the CEO expects there to be some type of executive order impacting crypto in the not too distant future. And he seems to be thinking about it in terms of custody and the ability for banks to offer custody services around crypto. Which is, an interesting one. Personally, I'm more interested in the means of exchange and the stablecoin side of things, and you'll hear about that in just a second too. I'll post a link to both a little bit about the crypto ball as well as the interview with the CEO of Circle about these topics. But somebody who we know personally who can get into some of these topics. Just again, I'll mention this was recorded about a week prior to the inauguration, but I don't think that anything has really changed that would have any reason to really change the perspectives on these things. Becky Reed, the former CEO of Lone Star Credit Union, now much more directly involved on the entrepreneurial side of things, working heavily with CUSOs and also as the chief operating officer of Bank Social, which is pretty central to the space. Without further ado, let's hear what Becky had to say. This one's a longer introduction than usual. I've got a good friend of mine, the former credit union CEO, the chief operating officer currently of the fintech CUSO Bank Social. We've spoken to her and her associate there, John Wingate, before, and also the founder of one of my favorite names for a company out there, using her name, Becky Reed as a Service, BRAAS. Becky Reed, thanks so much for taking the time to talk.
Oh, thank you, Glenn. Thanks for having me.
I think the timing is perfect because obviously you're front and center on all things crypto, Bank Social, heavily involved in decentralized finance, Web3, et cetera. And I think we can all agree that we're kind of at the cusp of something where we have a new administration, which it would be hard to argue other than that they are going to be the most crypto-friendly administration we've seen. So it really sets even further in motion a lot of the trends that we've already been seeing. Let's start with that. As we are, we're recording a week before Inauguration Day. What do you see in terms of where you expect things to go, just in the terms of the regulatory infrastructure environment that the government can kind of set forth?
Yeah, I think it's very interesting that the American people have spoken. In fact, every single federal candidate that ran on a pro-crypto platform, because they all had to have a stance, right? They all had to have a stance. Now, some maybe chose not to really publicize their stance, but every single candidate that had a pro-crypto platform won their election. And that speaks volumes from a federal level about the message that was sent to Washington around what the American people are looking at. And the crypto space, and when I say that, I speak for Web3 in general. I'm talking about the entire ecosystem, which includes things like cryptocurrency, blockchain, distributed ledger technology, AI even. So that entire ecosystem is really gaining traction. And I think 2025 and forward, we're going to see some things happening that have been frustrating that ecosystem in the past, including some clarity.
I was going to say regulatory clarity to me is like
yes,
the absolute kind of mantra that you really have to have in place.
Yeah, and here at Bank Social, and me personally, having come from the credit union space, being very heavily regulated, and banking, as you know, is one of the most heavily regulated spaces. I think healthcare would probably come in very close to that as well. But having grown up in an industry where you have to apply consumer protection regulations, where everybody is kind of getting in your business around how you are dealing with consumers and how you're doing business. And those consumer protection regulations, things like Reg CC, that's funds availability, things like Reg D, truth in deposits, talking about interest, dividend, Reg Z talking about truth in lending and fairness as it relates to lending protocols. A lot of the things that are happening in the crypto space, those types of regulations, they really apply. They're applicable, but nobody said that they are. And so there's this camp that says, well, those don't apply to us. And then there's this camp that says, well, maybe they do, but we're really not sure how. And so I think we're going to see some clarity. And I think that's really, really going to help this industry. And as you know, with the Republican incoming administration, we're going to have a new chairman at NCUA who is the only Republican on that 3-person board, and that is Kyle Hoffman, who has definitely made this space his platform. And that will be very interesting as well for credit unions.
Yeah, I mean, the other buzzword that I kind of think of that applies, and I think I don't want to put words here, but guardrails is the other one that kind of comes up. And, when we hear crypto friendly, I think some people picture Wild West, the rules don't apply. But I think what I'm hearing you say, and this is what I believe too, is no, we just need to know what the rules are, and there will be rules.
Oh, absolutely. Well, I don't think that consumers can interact safely with this space without them. And I think that sometimes some of the rug pulls and the negative things, people getting scammed, that stuff happens in traditional finance too. But when it happens in the crypto space and the Web3 burgeoning ecosystem, consumers don't really have a place to turn. Yeah. And the companies that are providing these services are unsure what kind of support they even have to provide. And so there's a gap there that we need to address.
That's an interest. I hadn't really thought about that one. Okay, so where do they turn? They turn to, it would probably not exactly be a popular idea to create yet another government agency to do that. Or do you somehow tuck it under one of the existing agencies? There's talk about consolidating the number of agencies we have today. So it's just one more factor that kind of gets thrown into that mishmash, I guess.
Yeah, I've always said that I don't believe we need a bunch of new regulation around this space, because when you really look at what the decentralized finance system is doing and what they're advocating for, it kind of looks and feels a lot like traditional finance. It's just done in a digitally native way. And there's functionality and efficiencies that are gained there that just haven't been available before. But at the end of the day, staking is like putting your money in a CD. It is. Yeah. There's lending protocols that look very similar to traditional lending protocols. It's just the rails they ride on and the things that happens, creating NFTs and stuff like that. It's just a new way to do things that we've been doing. But if consumers really are going to be engaging with this space, which they already are, and financial institutions are going to be using this technology to provide these financial products and services, we just need some clarity around probably the existing regulations already apply. Yeah. So I don't think we need a bunch of new ones.
Which also kind of reminds me of something we were talking about. This was news to me that you kind of teed up before we had the conversation. So much of the conversation winds up kind of getting, kind of moved over to the Bitcoin world. I've always thought much more in terms of exchange of value about the importance of stablecoin. You threw out a stat that I'd not heard before. The volume that ran over stablecoin in, I think you said the second quarter of 2024 was correct. Actually, the dollar volume was actually higher than the volume that ran over Visa's rails.
Oh, yeah. And this is just USDC specifically.
Yeah, and that's not even
which is that right. There are other stablecoins out there besides that. So that wasn't even taking into account Tether, which is the second most popular stablecoin behind USDC. So yeah,
I guess maybe then you put Tether up against MasterCard and you see what that looks like. Yeah.
There you go. There you go.
But it's interesting to me, and as we talked about, that's total dollar amount. It's not number of transactions. Right. The Visa, the credit card rails, and debit card rails still make a lot more sense for small value transactions, but it's a pretty good indicator of just how much these things are gaining traction and being used. And it's not, obviously, if it's that kind of money, it's not just the insiders who are doing
no, these are institutional
illicit transactions.
Yeah, these are institutional people, companies that are making large transactions for whatever purposes, whether they're moving their Bitcoin into a stable coin and moving that somewhere to do additional investments or whatever the case may be, there are large volume transactions that are happening globally in stablecoin. And what you just talked about being the small transactions
Mhm.
probably make sense on Visa and MasterCard. Well, I would argue that stable coins probably make sense for small transactions as well because it's infinitely less expensive
Yeah.
than the credit rails and the debit rails that just everybody's taking a bite out of that transaction, right? And so the cost of doing a $2 transaction on a Visa rail or a MasterCard rail as opposed to a stablecoin rail, it is quite interesting. It's
And
much, much less on a
that
stable
gets
coin.
me back also. I'm seeing that kind of being the marketing message Coinbase's latest TV campaign, where they're literally focusing on small business. And it's always like,
Uh-huh.
the shop owner who's a little bit older and is a little uncomfortable, but they talk to their son or their kid, and they're the ones that say, "Hey, have you thought about this way of doing it?" And suddenly they can say, you know, so much of this is awareness and trust. So if that's what it takes, yeah, I wasn't really referring to necessarily the infrastructure as much as the willingness for people to be able to grasp it and understand, the world of BitPay or somebody like that, who really starts to get a name recognition of the way that you can conduct these transactions without feeling like you have to have a PhD in technology.
Well, it's ease of use,
Yeah,
right?
exactly,
And
exactly. Yeah.
so if it's easy to use, it really doesn't matter at the end of the day. Consumers really don't care how the money's moving on the back end. They just need to know I can spend my money where I need to spend it. Stripe is another example. Stripe recently turned back on. They turned it on really, really early. Then they kind of turned it off when all the crypto craziness started happening with FTX and Tether losing its peg and Binance and all these crazy things, right? So they were like, well, maybe we don't need to get into the crypto space, but they turned it back on recently. So any small business or entrepreneur, Uber driver, whatever the case may be, that is utilizing Stripe for payments, a consumer can pay using cryptocurrency through Stripe. And so those kinds of use cases and the builders, the software developers that are building in the space, creating better interfaces for consumers to be able to interact with cryptocurrency to make payments. I think that those things, as they evolve, will make it um, more usable and less confusing.
A definition of terms, do you consider stablecoin to be a subset of crypto or a separate and apart kind of thing?
No, I believe it is a cryptocurrency.
Okay,
It's just pegged to a stable value.
because we were talking again, that's the other piece that's kind of holding things back. As we were talking, if something's fluctuating in value massively, whether it's the Argentine dollar, the Venezuelan dollar, the peso back a while back, people are not as comfortable if they don't know what it's going to be worth in a given, a week, a month out. But if you know that it's going to be worth $1, it becomes a much less complicated exercise.
Right, exactly. And makes you much more confident, to your point, in using it as a payment. In today's world, I think most people, when they hear cryptocurrency, they think about this speculative investment that is
Exactly.
akin to gambling,
Yeah.
right? And there are so many uses for cryptocurrency beyond that that I think that that's what is missing. But like Bitcoin, for example, that's probably the most well-known type of digital asset that is
For
out
better,
there.
for better or worse. Right.
Right. Yes, right. Whether you believe it's the end all be all or just the beginning of the end all be all, depends on which side you're on. But it is a very interesting thing because it's kind of like a commodity, like gold or whatever. And people who buy it usually hold on to it. They don't buy it to transact business. And so that's kind of the dichotomy. People are like, why the heck would I spend my Bitcoin? And frankly, most people don't.
Right, exactly. So with that backdrop, and given where the regulatory and the government's kind of environment is going to be on this, what are your priorities for Bank Social? How do you see that kind of playing out, and what you're really focusing on for the coming year?
Well, one of the things that we focus on here at Bank Social is bridging that gap between TradFi or traditional finance and DeFi, which is decentralized finance, and allowing credit unions specifically. We also can work with banks and have before in bridging that gap because to your point, you were talking about the technology, people's eyes start to glaze over, right? And they start going, I don't really understand how this is applicable into what I'm doing. And so here at Bank Social, we have a digital asset exchange, of course, where you can buy and sell cryptocurrency, all the way to a payments hub that is an intelligent routing payments hub that can take into consideration all different types of payments. When I first learned about distributed ledger technology back in 2015, when I heard about CU Ledger and I was looking at blockchain and what was happening with Bitcoin, I didn't really focus too much on Bitcoin as a commodity or an investment. I was looking at the rails it was riding on and knew it would be a disruption for payments. And so here at Bank Social, integrating and allowing credit unions to utilize traditional payment rails while preparing them for these new payment rails that are going to be coming online in the future, that's what we're focused on.
How do you think about that? Do you work primarily behind the scenes with the credit unions or financial institutions, or are you looking to actually help the education process directly with the consumer, or are you equipping the credit union to play that role?
We're equipping the credit union to play that role. They are serving their members. So we are kind of one of those behind the scenes in the back, allowing consumers to interface with the most recent payment systems that are available in a way that is seamless. Like I said, consumers really don't care how it runs. If it runs on the real-time payment rails or it runs on Visa or whatever, eventually it could be a stable coin. Just preparing the credit union for allowing their members to take advantage of these new technologies.
And so the Bank Social name, you're not looking for that to become a household name. That's not part of your exercise.
No, well, we have a B2C business too. So we have a consumer facing business as well as a B2B business where we work directly behind the scenes with credit unions. So it's a little bit of both.
Yeah. And I guess the B2C piece really could have continued apace regardless of the regulatory, the folks who were comfortable with that. But the new regulatory environment probably makes the B2B piece a bigger opportunity. Is that a fair way of thinking about it?
It is. And the B2B piece, of course, has a B2C aspect as the credit unions offering these things to their members. But, we feel very strongly that credit unions are analog DeFi, right? The financial cooperatives and the DAOs of the future, the decentralized autonomous organizations of the future, are really what credit unions are going to turn into. And so it makes sense for us to focus on helping consumers and introducing them to cooperative financial institutions that they can own, like credit unions, and enabling credit unions to make seamless payments available to their members.
What are you seeing in terms of traction right now? I mean, kind of there was I don't know what to call it, maybe a false start about 2-3 years ago with credit unions who had the opportunity to get an early head start on this, and that
my gosh,
went sideways. So it probably takes a little bit of that once burned kind of feeling. What's the attitude in the marketplace you're running into?
It's kind of interesting having really started getting involved in all of this in earnest in 2022 when I was still with Lone Star Credit Union. Most of the interest back then in 21 and 22 was the exchange, selling digital assets, right? And most of the entrants into the market, the players who were serving the credit union space really focused on that, whether it was Bitcoin only or custodial services similar to what Coinbase offers. Well,
buy, sell, hold. It was much more the buy, sell, hold side. Okay.
Exactly. And then FTX happened and, everybody ran the other way. But it's interesting because kind of as we started coming into Q3 and Q4 of 2024, financial institutions started getting a renewed interest in not only the digital asset exchange, but kind of looking at, well, what the heck are stable coins? What does that mean for payments? And there's a renewed interest for real world asset tokenization. The banks are looking at tokenizing deposits. People are really starting to embrace the blockchain and distributed ledger philosophy in uh, more than they were before. So it's actually been a quite interesting turn of events. Yes, people are interested in the digital asset exchange now too, but they are also looking at the broader ecosystem, as it relates to lending, as it relates to loan participations, things like that. Filene has actually taken up a study around real world asset tokenization
Yes,
and
I saw
lending.
that. In fact, we're going to be talking to Lamont Black about that in the not too
Yep.
distant future. So yeah, that's
Yeah. So I don't think it ever really went away. It kind of just went into the background and people kind of sat back and were watching to see what would happen. But now I think we'll really start, especially with this new federal administration. I think the banks will really start getting into this more so than they were before.
where do you, I mean, how do you kind of wave the flag on this? In places like Big Bright Minds from Filene, obviously, are a great venue. We got GAC coming up. I don't know if that's going to be someplace, but state leagues. I mean, are you finding kind of specific areas where you find the most receptive audiences?
Well, yes, I think that credit unions in general, you have this subset of credit unions who are really fast movers, and in some cases, originally when they partnered with companies in the space, got a little bit burned.
Mm-hmm.
That's what happens when you're an early mover and an early adopter of some of these new technologies. And then you have the fast followers, right? And then you have the people who are going to kind of sit on the sidelines and wait until it's really embedded before they move. But the fast movers, even though some of them did get a little bit burned, are dabbling again and looking at bringing these things. Of course, the industry, the crypto industry has matured a bit over the last couple of years. And so there are more things that are available now that just weren't available before. But yes, leagues are interested. Some of the core providers that are QSOs, that are kind of serving their credit unions at large with emerging technologies. There's some interest there. So you're starting to see some bigger institutional interest as opposed to just single credit union interest.
So you might have you could strike a partnership, an alliance with maybe some of those cores, and you could kind of play
Absolutely.
the bank's social capabilities. Yeah, we're probably running out of time already. We didn't even touch on some of the really cool stuff, like the idea that AI and how it's kind of
Mm.
got this kind of natural symbiotic relationship with crypto. Each side benefits from the other. We talked a little bit about how AI, you could use individual wallets to act as
Yes.
agents for people, which I know John Best has talked about a little bit as well. I mean, is that a little bit further down the road, or how do you think about that in terms of the roadmap of when we might start seeing these things come into the marketplace?
Well, I think that early you'll see some early, and this has already happened. I mean, AI is using a digital asset wallet, a crypto wallet, to conduct transactions. And I think, AI is digitally native. Well, distributed ledger technology is digitally native, and the tokens that ride on a distributed ledger are digitally native. All of this is written in code, right? So it's out there in the cloud, so to speak, in code. It doesn't exist in a physical form like some other types of technology that we've utilized in the past. And so, of course, it makes sense. If AI is going to be a personal assistant to you, it probably needs access to your bank account.
Yeah.
And if it doesn't have access to traditional payment rails, which are analog, it's going to need access to digital payment rails. And so it makes perfect sense that an AI might need to do some transactions with other digitally native software, and it would have to pay for that, and potentially even fractionally. It could be pennies or subsets of pennies that it's conducting transactions with. But yeah, AI actually kind of needs distributed ledger and cryptocurrency to really reach its full potential.
And I would take that even a step further, because I mean, I get a little bit uncomfortable with the idea of, here, AI agent, have entire access to my bank accounts and you
Yeah.
can just spend whatever you want. But if you can cordon off a little bit of an
Mm-hmm.
amount, that kind of like having your own little mad money for, long shot kind of investment strategies and things like that. I'll fund that wallet. I'll let it do stuff. So if it goes haywire, I don't feel like I've just lost the farm.
Right. I think too that digital wallets are going to take the place of siloed digital banking products.
Yeah.
And you and I talked on email before about how we don't think this open banking thing is going away. It's already in Europe. And now they have fewer financial institutions than we have here. So it'll take a little bit longer to proliferate the industry, kind of like the chip did. You know, they had it in Europe for a long time before it really gained efficiency over here in the United States. But I think that this concept of a digital wallet where we can kind of plug a lot of different things into it will eventually take the place of digital banking that is just accessible to your specific financial institution.
And I think what you and I think we're on the same page on this one. You know, a lot of the things the CFPB has done over the course of the last year or so are probably subject to reversal. Section 1033 probably isn't one of them. The train's kind of left the station, and I've heard enough kind of folks on the Republican side of the House that kind of like the idea too. So I don't see that one slowing down. As you make a very good point, a lot more financial institutions, much longer road ahead here, but it's happening. Speaking of longer roads, just one more thing to close out on, because we had this conversation before too. We're not talking about all this stuff like eliminating credit rails and ACH and everything by November this year. This is a longer term play, right? I mean, but it's happening is the bottom line.
It is. And that's why I urge credit unions to pay attention to this technology. And we utilize a methodology, or we recommend a methodology here at Bank Social. It's crawl, walk, run. Right? We don't have to feel like we have to jump into the deep end when things are still a little bit unclear. The traditional payment rails work just fine right now. Okay. And they're going to be around for a long time. But eventually, this new technology will start taking hold and it will start gaining market share. And some of these other antiquated payment rails will start going by the wayside. Is it going to happen in the next 12 months? No. Overtaking it, I mean. Will it happen in the next decade? 100%. But people still write checks. People still get checks. So yes, that's the kind of thing I think that we're going to be looking at now. Check volume goes down every single year, but it didn't get eliminated. Kind of like branches. We've been talking about branches are going away forever too, and they're not. So I think that sometimes the predictions that we make and the timelines that we put out there are probably not realistic when you look historically.
That old Bill Gates rule: we're overly optimistic in the short term, we probably underestimate the opportunity in the long term.
There you go.
Becky, it's always a pleasure. If people want to find out more, the Bank Social website, I guess the best place to do it?
banksocial.io or brassconsulting.com, or of course, Becky Reed on LinkedIn.
Oh, that's a good point. So you've got the website set up for BRASS.
I do. BRAAS. Yeah. I still do. Yes. It's okay. I do lots of CUSO consulting for credit unions. And so yes, I still have that part of my business on top of the things that I do.
Speaking of on top of, you also are the chairwoman for NACUSO, correct?
I am.
So yes, one more place. I'm sure I'll be seeing you at GAC, and then not too long after that, we've got the NACUSO conference coming up, I guess, in Las Vegas in
mid-April.
In mid-April. So
yeah, Bank Social will be at GAC, we'll be at FinTech Meetup, and we'll be at NACUSO and Financial Brand.
No shortage of travel coming. It's all kicking in again. Becky Reed,
right.
Thanks so much for taking the time.
Thank you, Glenn.
One thing I wanted to clarify after this, took a quick look. The comment about Visa and stablecoin volume is not inaccurate, but it's always, as usual, a little bit more of a complicated story than that. Based on what I'm reading, the top three stablecoins combined, USDC, Tether, USDT, and DAI, which is a distant third, combined, they exceed Visa's transaction volume. Again, that's the dollar volume of transactions, not the number of transactions. So from that standpoint, it's different. On the other hand, that's after stripping out stablecoin value that appears to be much more kind of just internal type of transfers that are not really directly related to multi-party transactions. So that actually takes the number down. If you didn't take that out, the number would even further exceed the Visa transaction volume. So I thought that was pretty interesting. Another thing that really gives you an indication of just how big stablecoins have become is the role they play in U.S. Treasuries. The idea being that stablecoins, since virtually all of them are pegged to the US dollar, have to have some kind of US dollar backing, just similar to a money market fund. And the amount of US treasuries that are now consumed backing up these stablecoins is significant, which is pretty interesting. And another one that I kind of picked up on that just popped into the news over the course of the last week, Nubank, one of the digital banking players, bigger in Latin America, has just expanded a pilot program they already had, offering rewards, quote unquote, a rewards program for USDC, the Circle stablecoin. The rewards aren't for like a typical credit card where you are rewarded for using the stablecoin. It is for holding the stablecoin in their wallet. So you hold the stablecoin, you get a little bit of money back. That sounds like interest to me. And I'm guessing it's not called interest for regulatory reasons, which takes us back full circle to some of the regulatory clarity that will be coming out. And it'll be interesting to see if that somehow enters the mix as well. With that, I think we pretty much got another episode of the Big Cast in the books. As I said before, you can always find out more about the Best Innovation Group by checking out the website big-fintech.com. You can find out more about my firm, 154 Advisors, and follow up with me with any questions you might have by reaching out to me, Glenn Sarvati, 154 Advisors. LinkedIn's probably the best way to do that. LinkedIn these days, probably the best way to track down, along with the website, the Best Innovation Group at Big FinTech. Our grand poobah, John Best, can be found at JB FinTech as well. And we've got an initiative coming up trying to integrate better with BlueSky coming up in the near future. So more to come on that very soon. Also more to come on the whole quantum computing situation and the quantum breakthrough. That'll be our episode next week. John Best and our friend Roger Grimes will be joining us for that conversation. So new content pretty much every Tuesday here on the Big Cast. We hope that you check us out, whether at the website directly, or you'll also find our past episodes in the archives under the media tab. You can always track us down also on your favorite podcast apps and subscribe to us, hopefully, at Spotify, Amazon, Apple Music, etc. Wherever you track us down, we hope to keep the conversation going. And as always, thanks so much for listening.
Check back each week for the latest from the Big Cast. Or better yet, we hope you'll consider subscribing for free via Spotify, Stitcher, Apple, or wherever you get your podcasts. If you have questions or comments, we'd love to hear from you. Tweet us at Big FinTech. Email info@big-fintech.com. Or visit us at big-fintech.com and click on the Media tab, where you can post a comment or check out our archive of hundreds of past episodes. See you next week.